Now, what we're going to look at is what should I have so that I can have the confidence to invest in cryptocurrencies? What do you need to give you the confidence to take your hard-earned money and invest it in cryptocurrencies? Yes, we always say in all of our Zoom calls that education is very important. But education or knowledge, when not rightly used, it's not going to give you the confidence that you need to put your money into crypto. Because at the end of the day, any serious investor or any smart investor, when they invest in cryptocurrencies, their main aim, their first aim is, I don't want to lose my money. That's the first thing that anyone has. Like, I do not want to lose what I have worked so hard for before they even look at the returns. That's what a smart investor does. That's why many people that lose money in this industry, they focused first on making money. I want to invest in this business so that I can make money. That's already a problem. If you want to make money in cryptocurrencies, your first aim is, I do not want to lose the money that I have worked hard for. That should be your first goal. I do not, let me write that down. I do not, in capital letters, I do not want to lose what I have worked hard for. Because personally, I do not know what you have done. I do not know what you have done to the point that you have spared money and you have decided now you want to invest in cryptocurrencies. I don't know what you have done. So the first thing is that you have to make sure that you do not lose your money. That means that the first and foremost, you have to make sure that you invest in sustainability. So if you do not want to lose your money, the first thing is you have to invest in sustainability. Sustainability. Now, I don't know the actual definition of that word, but you can just go to any dictionary, either it be physical, either it be online, and search, what does sustainability mean? And once you see what that word means, now you come back. So you understand that the only way for me to not lose my hard-earned money is to make sure that I invest in something which is sustainable. This is where oil and water separates itself. Because if you mix oil and water and you shake it well, at some point they will mix together. But at a certain point, you will see that water will stay at the bottom and oil will be at the top. Now, this means that what we are going to discuss today is actually, when you come into this world of cryptocurrencies, what makes a project sustainable? Or, since now we are buying the crypto, because in the blockchain we buy the crypto, what makes a specific cryptocurrency a sustainable investment? That is what we are going to look on tonight. If we are together to this point, please go to your box chat and type 222 if we are together to this point. And for those who are live with us on TikTok, please You can like the live and you can share the live so that we can have more people joining and learning with us together, because what we are going to cover today, what we are going to look into today, like what makes a crypto project sustainable, is something that when you have in the back of your pocket, you're going to be very confident when you're doing your investment. Like if you get a project, you just look at it and you start doing your analysis. You're like, okay, this project, it has 1, 2, 3. It means that if it has 1, 2, 3, we can get to a certain point where we have 2, 3, 4. Now I see people are very eager to learn, like, what makes a project sustainable? What makes a cryptocurrency a sustainable investment? So when we're looking at sustainability, we always say that when anyone wants to buy a cryptocurrency, I always like to simplify the things that they are supposed to look into. When you're buying a cryptocurrency, okay, you have your money, you have worked so hard, you have saved so hard. Now you want to invest in crypto because Charity has said there is so much money in cryptocurrency. The thing that you are supposed to look at are the following. First thing first, I always say, you have to look at the project behind. You have to look at the project behind. When you're looking at the project behind, you have to simply look at the following things, okay? First thing first, you always have to look at, this is a cryptocurrency I'm going to buy. What is the project behind? Okay, this is the project behind. And one thing to add is that the project is usually highlighted in the white paper. Okay? When it comes to stocks and all that, we have the memorandum of understanding. But in cryptocurrency, we have something called the white paper. It highlights everything about that specific project. So when you are going through that white paper, the first thing I always tell people, you have to look at it is, what is the problem the project is trying to solve? What is the project that, what is the problem that the project is trying to solve? The second thing is, what is their solution? What is the problem? What is the solution? When you mix these things, these two things together, you have what is called the engagement factor. Engagement factor. This means that this is what other people are going to come into the project to use. Like, let me give you, let's speak with examples, because examples are always the best. Examples are always the best. When we look at a project like Ethereum, I'll speak of Ethereum, okay? When we look at a project like Ethereum, which is very common to everyone who is associated in this world, they sat down and saw, after more than how many years, 4 or 5 years of blockchain development, there was still no logic in the blockchain. There are no smart contracts in the blockchain. That is the problem that they saw. And what was the solution? Their solution was to create a blockchain, okay, that can support smart contracts. And once smart contracts could be supported in the blockchain, we could create different applications. Once we create different applications, then people can start integrating other services that we see in the real world into the blockchain with very, very easy steps. So that is the problem they saw. And their solution was what? Was the blockchain. Now, it means that people who want to integrate normal services, normal products, using the blockchain technology are going to need the Ethereum project. That is where the engagement comes. So it means that when you're investing in the token, the coin, the ETH token or the Ethereum coin, you are investing in what is behind the coin, which is the project Ethereum, which aims at providing what? What it said it's going to provide. Now, before we do any other thing here on the engagement factor, you have looked at the problem, you have looked at the solution. The third thing that I always tell people, it's very important, but so many people miss it, is that as part of the solution, the third thing now, how is the coin used as part of the solution? Coin used in the solution. Because at the end of the day, yes, Ethereum is a very good project. We love Ethereum. It is doing wonderful. But the only way for you to invest in that project is buying the coin. Now, if the coin has no utility or has no specific usage as part of the solution, then no matter how big the project becomes, the coin is only going to be speculative. As long as the coin is not part of the solution, then the price of the coin, the movement of the coin is 100% speculative. Not because of how people are adopting to the project, no, but because they think that since this project is good, then the coin might also be good. So make sure that once you have analyzed the engagement factor, which is the problem and the solution offered, you have to make sure the coin is used as part of that solution. If we are together to this point, please go to the box chat and type now it's 333. If we are together on those three main points, please go to the box chat and type 333. Okay. You guys, you're amazing. You're very sharp. If that was clear, please make sure that you're going together with us. I don't want to leave anyone behind, because by the end of the session, you all have to be confident when investing in cryptocurrencies. There's no point of you sitting here for almost more than 30 minutes, 40 minutes, and still having doubts on your own decision-making when it comes to investing in crypto. This is what you need to know. Now, thank you for those who are with me and we are progressing together. Now, you have done the due diligence of looking at these three things. These are all listed in the white paper. Now, the next important thing in terms of the project is the roadmap. The roadmap. This is where a very good project dies. The project started very well, but it is no longer adopting to the outside world. Like, we started here. What are you doing? What are you doing in the next 2 years? What are you doing in the next 3 years? What are you doing in the next 5 years? That's very important for anyone who has long-term perception when it comes to investing in cryptocurrencies. Because when you're investing in any crypto, if you at least put yourself in a position of waiting for a currency to grow or for a crypto to grow in the next 10 years, you are more likely to make very good returns, very decent returns. Now, the issue of roadmap is very, very important. We have seen so many blockchains evolving. We have seen the Bitcoin blockchain evolving. Okay? We have seen Ethereum. Ethereum, they're doing so much in terms of evolution. We have seen the project that we do our best to educate people about, the Encryptors project. They have so much to offer, because at the end of the day, the main aim is to make sure that the coin that we're investing in has long-term usage, long-term organic usage, long-term engagement factor. The roadmap is very important. Another thing, now this is very important, that another thing that is very overlooked is the flow of information from the team to the end users. Knowledge or education. Education. The flow of knowledge or the flow of information from the team that's doing the development to the end users. Because at the end of the day, no matter how much you're doing, you have to make sure that you have a way of sharing your vision with your end users. And that, when you have all of this right, you have the right engagement factor, you have the coin as a solution, you have a very strong roadmap, and you have education. When you combine all of this together, that's the only way that your project is going to invite users who are what? Users who are loyal, organic users. You invite investors instead of what? Instead of speculators. You are going to invite investors instead of what? Speculators. And once you achieve this, you have made one major step in a two-step process. So up to now, we have covered the whole aspect of the project behind the coin. If we're together to that point, ladies and gentlemen, please go to your box chat and type 444. Please go to the box chat and type 444 if we are together. And for those who are live with us on TikTok, please make sure that you keep on sharing this information so that we can go together. And while you're typing 444, we have a question here from Frida saying, where does the white paper, where do you get the white paper basically? It's very, very open. Every project that you research, you just search, there's always a section for the white paper. There's always a section. So you can either Google it like Bitcoin white paper, Encryptors white paper, Ethereum white paper, and you'll get that specific document and you can go through it. You can read it. You can read it. Now, another thing, okay, we are together to that point. Now, that's very, very good. Now, that, as I said, it's the first process of a two-step process. Now, the second process, or the second thing that you have to look into, number 2, is the economic aspect of the coin now. We have sat down, we have analyzed the project. It's a super project. Now we are going to walk through the economic aspects of the coin. And that, in general, the economic aspect of the coin is called tokenomics. This is where good projects come to die. This is where good projects come to die. When we are looking at cryptocurrency projects, tokenomics, we are basically looking at how supply is versus the demand. We have to make sure that the supply of coins is relatively or not proportionally equal to how much the demand is. We have to make sure that throughout the project, the demand of the coin is always there. Now, one thing that you have to know, and one thing that should give you some relief, is that the demand of the coin, basically now the organic demand, that organic one, is caused by what the project behind is. So what we have covered earlier is what creates organic demand. People needing the project. It's because of what? Of the project, the demand. The supply, on the other hand, this is programmed. So demand comes from the project. And let's add something here, the narrative. Okay? And the supply is programmed. It's that simple, ladies and gentlemen. It's very simple. The demand comes from the project, and sometimes the narrative. Like, people will come in and hype about a specific coin. Now that becomes a hyped price, and the coin will shoot because of the narrative. But some coins usually perform slowly because of what? Of the organic demand of that specific project. Now, another thing is that, as I said, the supply is programmed. It's programmed by who? By the developers. And where do you see the supply program? You see the supply program in the white paper. It's written. In the, what they write is like, how many coins are we going to have? Maximum supply. Okay. How many do we mint now? How many have we given to the developers? How many have we done that? How are we going to bring new coins into supply? All of that is written also in what? In the white paper. So when we are reading the white paper, we are looking at all of those aspects together at once. Now, one thing that I should give you comfort is we are going together to go through one specific white paper together, and we are actually going to see now what are these factors coming in. How are these factors playing in? And we are going to go through the encryptors white paper. Now, for those who are still in the call, who are still with me, if you're ready for us to go through the encryptors white paper, please go to your box chat and type 555. If we are together, please, and you are ready for going through the encryptors white paper together so that we can see the things that we are trying to say here. How are they in practical terms? Okay, now that's good. That's good. I see Dr. Libe, I see iPhone, I see Frank, Anastasia, I see Michael. Now that's good. Now, we are going to go together through the encryptors white paper. So once you are in here, once you are in the encryptors website, I hope that you can see the website. Yes, I see you can see the website. Now, once you are in the website, once you are in the website, we go to solutions. Let me see here. I can see. Okay, we go to solutions and where is it? Where is the white paper? I'm looking for the white paper resources. Here it is. On the help, the white paper. Now, This one, the white paper, the Encryptus white paper. So www.encryptus.com/white paper. There is a lot of things that you are going to see, right? But we are basically going to see a few things together. We are going to see a few things together. I said the first thing that we are looking into is the problem. Here it is. What is the problem? So they have explained all a lot about the growth of popularity of decentralized finance services and all that. So what has Encryptus seen? It's here. Okay? What has Encryptus seen? It's here. Like, first of all, there is a high risk of scam and fraudulent smart contracts. That's the first thing they saw. They saw there's another problem of management of private keys. There's another problem of what? Of complexity of smart contracts. And they go into details into explaining that to any user. Like we have seen, we have one problem, two problems, three problems. So what is the solution that they have offered? Once you have seen the problem, you go to the solution. Because one thing that everyone who is in this call should know, for every single problem you see, there is no one fit solution. Not every problem has one solution. So sometimes you might think that you're the one with the only solution, but someone has a solution. So you have to look into that person's solution and you make sure that their solution aligns with your ideal solution when it comes to investing. Okay? So what is the solution that they have offered? They first of all have a simplified Web2 interface. They have a security and trust in smart contracts, meaning that you only get secured and trustworthy smart contracts. And they even do the management of your private keys, okay? They have done a lot of automation. The application is easy to use. There is a reduction in human risk, okay? And they explain all of that. Now we go to the third and most important point. You get time, make sure that you go through this white paper on your own and you read it, okay? Now they come and explain now the project. They come and introduce their token and where it's used. And they come and they even show the roadmap. Like we have a roadmap here of Encryptus. Like what do they want to do? They want to create an NFT box. So NFT that is going to allow you to get more functionality within the Encryptus. Multi-investment contracts, meaning that you're holding one token, but it's doing multiple investments. Ink bridge, launch pool. So it means that the way Encryptus have designed their ecosystem is that this token now is going to be used within the ecosystem to do what? You buy NFTs, you do multiple investments, you can do ink bridge, you move coins from one blockchain to another. There's going to be a launch pool where you lock your ink and you get other coins. That was the third point of how I was saying, how is the token used as part of the solution? And now we are going forward to the sixth part, okay, which explains about ink economy. The project has been covered with everything, the roadmap, the information, everything else. Now, this is where I said coins come to die, token economy. The only reason that Shiba Inu will never get to $1 is what? Token economy. The reason that the meme coin that people are thinking, okay, I've bought this meme coin, is going to get to 0.01 and it will never get there. It's because of what? Of token economy. How many coins are there and how much equity is inside that specific what? Coin. It means that it's not as easy as people think for Bitcoin to get to what? To 200,000. Why? Because by the time it gets to 200,000, its own capitalization is going to be more than $4 trillion, more than the current capitalization of the market. That's when it gets to 200, $4 trillion. Now, that is something that so many people have not yet been able to put together. Now, this explains the economy of the token, explains everything. And I don't want to take, I don't want you to take or to rob you from the knowledge of reading this white paper on your own, because I believe there's so much that you're going to learn in this white paper. There is just so much, and you're going to love the project because it gives you an opportunity for so much potential for your growth. But I'm not going to go that. What I'm going to do right now is to actually go back to the whiteboard, as since I've just shown you the white paper of encryptors. But right now, for me to go back to the what? To the whiteboard and finish off by showing you now how are the token economics of encryptors. How are the token economics of encryptors? So I'm going to walk with you now through the token economics of encryptors. The token economics. Now, the way encryptors have designed their project is they saw that the way we have designed our projects, we are going to only need a maximum of 200 million. 200 million Inky token. 200 million Inky token. Now, out of this 200 million, the project itself will only need 10 million. So this was taken. It is giving out bonuses. The project is giving out bonuses from the 10 million. There is launching of the project. There are issues about liquidity. There are issues about games. There are issues about so many things that are going to be integrated into the what? Into the ecosystem. Now, what is left that has to go to the public is only 190 million ink. Now, you as an investor, your main concern should be, how are these coins going to come into market? Because within these 10 million coins, they already initiated the project, so there was no ICO, there was no airdrop, there was no nothing. All of this, you come, when you want to invest in ink, you buy coins that are already in the market. So what happened is, encryptors decided that these 190 million coins that are going to come into the public are only going to come in through a process called staking. Now, staking is not a new concept when it comes to the crypto world, but for those who are not familiar with the crypto industry, staking is the process of locking your assets in return for a reward, or more commonly now, a dividend. You buy your assets in the open market, but you lock them for a specific period of time, and in return, you get rewarded for you locking your assets. You can go through the Encryptors website and it explains about staking. But staking is basically buying coins, locking them for a reward. Now, the protocol knows why it's giving you access for you to lock. so that they can give you a reward. So one project with another mate differentiate why they facilitate or they allow staking, but it's basically you buy coins, you lock them. So with Encryptors, they say that anyone who buys coin in the open market and decides to stake them through Encryptors wallet, then the new coins that we are going to bring into circulation is going to be the reward that they get. So it means that when you do staking inside the Encryptors wallet, when you stake ink, the reward comes from the 190 million. When you buy ink and you stake it, your reward comes from the 190 million tokens. Just a moment, please. Ooh. My phone was dying and I'm live on TikTok. I'm sorry for that. So it means that you have seen the project is good. You decide to buy ink, but ink is giving you an opportunity that the coins that you bought with expectations that they are going to give you higher returns in the future, they can also provide dividends to you. And currently, we can get up to probably 70% APY of the tokens that you have per year, 70%. But this percentage is not fixed. Why? Because, as I said earlier, tokenomics is where coins die. Eh? So the way Inc. saw, based on other projects, they decided that 190 million coins, yes, but only 10,000 Inky per day. So it means that on every single day, there is one cycle which 10,000 inks are distributed into circulation or are bought into circulation, but through what? Through people who have done staking of Inky token. And with Encryptors, the good thing is you can play around within the website. There are different contracts which you can lock. We have fixed contracts, we have flexible contracts, and that allows a person to choose what they want to invest in. But all I know is Inc. is a good token, not only because it has a strong project called Encryptors behind it, but because it also has strong what? Tokenomics. Because if I do the math right now, let me do the math. Currently in circulation, we have about 15 million coins, plus or minus. So when on every single day, we have 10,000 coins coming in, and we have 15 million already in circulation, it means per day, I'm doing the math here, per day, only 0.067%. That's the inflation of ink. 0.067%. Let me do that times 30. That's 2% per month. Huh? That's very, very small compared to what other projects are doing. And it means that since only 10,000 coins are coming in per day, it means that the further down we go down the road, the more years come, the more people are staking. It means that ink is even less and less inflationary. It's actually deflationary. Because when we started, they were minting 1% of staked amount. Now we are at what? 0.067. It means it's going to go down. It's going to get to a point where the inflation is 1% per year of the coins. Now that's all economics, and I don't want to bore you with economics, but what I can say is we have seen the study case of Encryptors. how you can benefit by just buying the coin, you have an additional option where you can stake it. But the only thing that is going to give you confidence is for you to be able to analyze the cryptocurrency project. The only thing that is going to give you confidence in taking out your hard-earned money should not be because Charity has said he has been staking with Encryptors for the last, probably 5-6 years. No, it should be because you are confident in the project, because you have done your due diligence. You have well analyzed the project. And now you are going to do what? To invest because you are confident that your analysis was good. Now, if we are together to that point, ladies and gentlemen, please go to the box chat and type 777 as I welcome questions from your side. As I welcome questions from your side, type 777. One thing that I'm going to show you while I'm waiting for your response and your questions is within the Encryptors website. Within the Encryptors website, we have this wonderful, wonderful tool on the solutions place, and we go to staking, solution, staking. Where are you? Okay. Staking, and we go down here, we have the simulator. Hey, where is it? Here it is. I passed it. We have this simulator. So on top here, you get a glimpse of what you can get with Encryptors. If you look for that 6 months, you get this annually, you get all that numbers. But here, we have a tool which you can use. So you can select the currency that you have. Maybe it's Ugandan shillings. We have, okay, I've seen we have people from, I don't think the SSP is here. But let's use, for example, the Kenyan shilling because we have our friends from Kenya. So it shows you maybe with 1 million Kenyan shillings, you'll get perhaps 5,000 and what? And 5,084 ink, 5,184 ink, which is this one. And within a year, you'll get this profit. So you can play here. Even you can select a month. But you can play with this tool. But one very important disclaimer is that when you're using the simulation calculator or the staking calculator is that this assumes that everything stays the way it is. Nothing changes. But to this point, we have highlighted that the price of the coin fluctuates. And also these percentages, they what? They go down. Why? Because 10,000 coins are coming in per day, but more people are staking. So these percentages usually change going down because more people are coming in, because ink has to be less inflationary. So you can use this tool to at least approximate, give you a rough idea of where you're going to land. If there's any question, ladies and gentlemen, I would like to, okay, we have a question from Zhao here, is asking, what is the difference between ink and the token? Ink is actually the token itself. It's the token. It's a token because it's a cryptocurrency built on an existing blockchain. So ink is the token. Okay, we have another question. How could we know that ink token is an asset token and not a meme token? Aha, that's a very, very good question. How do you know a coin is an asset token, and how would you know that ink is an asset token and not a meme token? Ink is an asset because first and foremost, it has a project behind it. So it is the face value, the representative value of the project itself. Unlike a meme coin has no project behind it. It's only surrounded by speculation. People come in, they buy the meme coin, and they go. They expect the coin to excel. Ink is also an asset because you can use the token within its ecosystem, unlike meme coins. Meme coins have no use within the ecosystem other than sending and waiting for the price to go up. And some makeup, some makeup utility which has no sense at all. So it's an asset because it has a project behind it. It's used within its project, and it does not have the tokenomics of a meme coin, because meme coins usually have very large denominations. Like you find more than 1 billion coins. They're like, why do we need 1 billion coins? I hope that question is answered properly. Is there any other question, even on the TikTok side? Do we have any question? See. We have, okay, we have no question. Even on the TikTok side, hakuko na maswali. So I think that is it for today. It was a very, very good session.